everyone, and welcome to today's deep dive. We're going to be taking a deep dive into HDFC Bank, a major player in the Indian financial scene.
Absolutely.
I've got some data here from Screener, and let me tell you, there's some really interesting stuff in here. We're talking about, market dominance, recent financials, the whole picture. We're going to try to break it all down in a way that makes sense and that's memorable.
Sounds good.
Yeah, I was just looking through this, and the first thing that jumped out at me was just how much of the market share HDFC has. And then there's this whole thing about financing profit, taking a dip lately. That definitely piqued my interest. So let's jump in and see what we can uncover.
Let's do it.
All right, so first things first, HDFC Bank. It's headquartered in Mumbai, and it's actually India's largest private sector bank when you look at assets.
Wow.
And get this, it's actually the 10th largest bank in the entire world by market cap as of May 2024.
Huge.
Yeah, that's some serious global clout.
It's really interesting that you point out the private sector aspect because, in India, that means that HDFC isn't run by the government. It operates completely independently.
Yeah.
And to land in that global top 10, that's not just impressive. It's a sign of, serious financial strength and recognition on a worldwide scale.
Wow, that's incredible. Okay, so moving into the key points section, Screener points out that HDFC has a 15% market share when it comes to India's banking advances. And hold on, it gets even bigger than that. It's a 37% share among private sector banks, plus they're the second largest bank in India overall. They're leading in pretty much every asset category. I mean, what does that kind of power even mean practically?
Well, it means that HDFC is what we call a systemically important bank. They're one of only 3 in India.
Oh, wow.
Think it this way. They're so big and so interconnected that if HDFC were to fail, it would ripple through the entire economy.
That's a little scary.
And another sign of a high level of trust is that the government actually entrusts them to collect direct and indirect taxes.
So it's not just about being big, it's about being really integrated into India's entire financial system.
Exactly. And when we say market leader in every asset category, we're talking about everything, home loans, car loans, business financing, credit cards, the works. HDFC has a finger in every pie, which means they're catering to a huge range of customers and needs.
That's pretty impressive. So I'm looking at the pros and cons section here, and I know these are generated by screeners, but there's still a pretty good jumping off point for discussion. On the plus side, we've got, they're expected to have a good quarter, strong profit growth, 23.4% CAGR over the past 5 years.
Wow.
And a healthy 22.9% dividend payout, which is good news if you're an investor.
Okay.
Then we've got the, more cautionary points, trading above book value, low interest coverage ratio, and huge contingent liabilities. To be honest with you, I'm not entirely sure what those are.
Well, let's break that down. Contingent liabilities are essentially potential obligations that depend on something happening in the future. Kind of like, if you agreed to cover your friend's loan if they couldn't pay it.
Right.
You don't owe anything right now, but you might have to pay up later.
Oh, that makes sense.
It's like a guarantee that could come back and bite HDFC.
Gotcha. And then there's also a big chunk of other income listed here. What could that even include?
Well, it's a bit of a catch-all term. It could be fees, commissions, profits from trading, gains from selling off assets. It all adds to their bottom line. But the question is whether that income is consistent and reliable over the long term.
Okay, I see. All right, let's look at these quarterly results. Back in September 2023, I'm seeing a massive spike in revenue. Any ideas what might have caused that?
Mm-hmm.
And then there's this whole financing profit thing. It went negative at the end of 2023 and stayed that way into 2024. What's the story there?
Okay, well, that revenue jump, it could be from a few different things. It could be, organic growth, maybe a sudden increase in lending activity, or a surge in fee income, or it could be something a little less organic, like they acquired a big portfolio of loans, or they made a killing selling off some assets. We'd have to dig into the reports to know for sure.
Makes sense. What about the negative financing profit? Is that something to worry about?
It's definitely something to keep an eye on. It tells me that HDFC's core lending business might be facing some challenges. This could be due to, rising interest rates, tougher competition in the lending market, or it could even be a strategic move by HDFC to kind of shift gears. It's a trend that definitely warrants further investigation.
Okay, last thing on my list here is the shareholding pattern. One thing that really stands out is the amount owned by promoter holdings. It's consistently over 25%. Who are these promoters, and what does it mean that they have so much control? Also, I noticed foreign institutions have been increasing their stake in recent quarters. Why is that?
Right. Well, in India, Promoters are usually the founders
Hmm.
or the people who are instrumental in setting up the company.
Hmm.
They often hold a big chunk of the ownership and have a lot of say in how things are run. In HDFC's case, it means that the promoters have a vested interest in the bank's success and are likely shaping its long-term vision.
So their interests are aligned with the banks, which could be a good thing. What about those foreign institutions?
That's an interesting development. You know, it usually means that those investors see potential for growth and good governance practices in HDFC.
Hmm.
Foreign investors bring capital, and they often demand transparency and accountability, which can actually be a positive influence on the bank's future.
So understanding who owns what can actually give us some insights into where HDFC is headed.
Absolutely. It's another piece of the puzzle that can help you understand the dynamics at play.
I'm starting to see how all these pieces fit together.
Huh?
What are your thoughts on those pros and cons? Should we be worried about that high dividend payout?
Well, while that high dividend is certainly attractive, its sustainability really depends
Right.
on HDFC's continued profitability and future growth prospects.
Mm.
We should definitely take a closer look at those.
Okay, and how about those contingent liabilities? Should we be hitting the panic button?
The number does seem massive at first glance, but we really need to analyze them in context. What exactly are these liabilities tied to?
Right.
Are they manageable risks, or are they potential red flags that requires a deeper dive?
Okay, let's dive into that. You mentioned that we should take a look at HDFC's profit growth and future prospects to see if that dividend can hold up. Let's unpack that next.
So, when we look at that high dividend payout of 22.9%, it's crucial to assess, whether HDFC's earnings can actually support that in the long run.
So how do we even begin to figure that out? What should we be looking at?
Well, one of the key things you want to examine is their profit growth over time. We know they've had strong growth historically with that 23.4% CAGR over the past 5 years.
Right.
But is that trend sustainable? Are there factors that might slow them down? That's what we need to unpack.
Okay, so consistent growth is important if they're going to keep paying those dividends. What else should we be considering?
Another factor to consider is HDFC's future prospects. What are their growth strategies? Are they entering new markets, investing in new technologies? The answers to these questions will give us a sense of whether they can continue to generate the earnings needed to support that dividend.
That makes sense. So it's not just about past performance, but also their potential for growth moving forward.
Exactly. It's about understanding the whole picture.
All right, let's switch gears for a moment and talk about those massive contingent liabilities. You mentioned they could be potential red flags. How do we figure out if they're a real threat to HDFC?
The key is to dig into the details. What exactly are these liabilities tied to? Are they related to guarantees on big infrastructure projects? Do they stem from potential legal claims? We need to understand the nature of the beast, so to speak.
So we need to play detective and see what we can uncover about these liabilities. Where would we even start looking for that kind of information?
You'd want to carefully review HDFC's financial statements and any other disclosures they've made. They're obligated to provide information about these things, but it might take a bit of digging. Look for any mentions of guarantees they've made, lawsuits they're involved in, or any other potential obligations that haven't fully materialized yet.
Okay, so it's about reading between the lines and looking beyond the headline numbers.
Mm-hmm.
What happens if we find something concerning? How do we assess the potential impact on HDFC?
That's where things get tricky. It's not always easy to quantify the risk associated with contingent liabilities because it depends on events that haven't happened yet. But you can try to gauge the potential impact by looking at the size of the liabilities relative to HDFC's overall financial position.
So if the liabilities are relatively small compared to their assets and earnings, it might not be a huge deal. But if they're massive, it could be a sign of trouble down the road.
Exactly. It's all about relative size and the likelihood of those liabilities actually coming due.
All right, let's move on to that big chunk of other income on their books. You mentioned it could include things like fees, commissions, trading profits, and gains from selling assets. How do we know if that income stream is reliable and sustainable?
That's the million-dollar question, isn't it? The key here is to analyze the composition of that income and determine its source. Is it coming from steady, predictable sources, or is it more volatile and unpredictable?
So if they're consistently generating fees from services they provide, that's probably more reliable than if they're making big bets on the stock market and relying on those gains to boost their income.
Got it. Consistent and predictable income streams are generally more sustainable in the long run.
Okay, I'm getting a much clearer picture of how to analyze this, but how do we actually dig deeper and find out the specifics of where that other income is coming from?
You'd want to examine their financial statements, particularly the notes to the accounts. They're required to provide a breakdown of their income sources in those notes, which will give you a better understanding of the key drivers of their other income.
So it's all about going beyond the surface and looking at the finer details. This is really eye-opening.
It's like peeling back the layers of an onion, isn't it?
Ah, I like that analogy. Okay, let's shift back to those quarterly results for a minute. We saw that massive jump in revenue back in September 2023. What are some of the possibilities behind that? Could it have been driven by something other than organic growth?
Absolutely. One possibility is acquisitions. Maybe they acquired a new portfolio of loans or perhaps even another financial institution, which would bring in a sudden influx of revenue.
Ah, that would definitely explain a big jump like that.
Yeah.
What are some other possibilities?
Another thing to consider is one-time gains. Maybe they sold off a chunk of their investment portfolio and booked a big profit. That would show up as a revenue spike in that quarter.
So it's not always about steady growth. Sometimes it's about strategic moves or even just good timing in the market.
Exactly. It's all about understanding the context behind the numbers.
Speaking of context, let's revisit that negative financing profit trend. We talked about how it could be a sign of challenges in their core lending business. But you also mentioned it could be a strategic move by HDFC. What would that look like in practice?
One possibility is that they're deliberately reducing their exposure to certain types of loans.
Yeah.
Maybe they're pulling back from riskier loans or those with lower profit margins.
So they're being more selective about where they lend money.
Exactly. It could be a sign of caution, a way to manage risk and protect their profitability.
Or maybe they're shifting their focus altogether.
That's another possibility. Maybe they're seeing more opportunity in other areas of their business like fee-based services or wealth management, and they're deliberately reducing their reliance on traditional lending.
So instead of looking at it as a negative, it could be a sign that they're adapting and evolving their strategy.
Precisely. It's all about perspective and understanding the bigger picture.
This deep dive is really highlighting how important it is to think critically and not just take the numbers at face value.
I couldn't agree more. The numbers are just the starting point. The real insight comes from understanding the story behind them.
Well said. Now, I'm curious to hear your thoughts on the biggest opportunities and challenges facing HDFC Bank in the years ahead. We've covered a lot of ground today, but what are the key things you think our listeners should keep in mind?
That's a great question, and one that deserves a deep dive of its own.
Let's do it. What are the potential hurdles HDFC might face? What about the bright spots on the horizon?
When we talk about the future for HDFC and what opportunities they might have, well, one thing's for sure, they're in a great spot. India's economy is expected to keep growing, and they're the biggest private sector bank, so they're ready to benefit from that growth.
Yeah, they've got a front row seat to all that growth, but they're not the only ones in the game, right?
Exactly. That's one of the big challenges for HDFC, increased competition. We're seeing new players all the time, including all those tech-focused fintech startups. They're quick, they're innovative, and they're really putting pressure on traditional banks like HDFC.
So it's like a race to see, who can offer the best services and who can adapt to those changing customer needs.
Yeah, that's a great way to put it. And we can't forget about the regulatory environment. India's banking sector is heavily regulated, and those regulations are always changing. HDFC needs to navigate those changes, effectively while keeping an eye on profitability.
Right. So they've got to be adaptable and compliant, all while trying to stay ahead of the competition. That's a real balancing act.
It is. And then there's the global economic environment. Things like rising interest rates or geopolitical uncertainty. Those things can really impact even the biggest banks.
It's like a reminder that they're not operating in a bubble. Everything that happens on the world stage can affect them, too.
For sure. So to really thrive in the coming years, HDFC needs to be strategic, adaptable, and maybe even a little bit bold.
Okay, so we've got competition regulations and global economic factors to think about. Those are some hurdles, but what about the good stuff? Where do you see the biggest opportunities for growth?
Well, one area with huge potential is digital banking. India's middle class is growing rapidly, and they're really comfortable with technology. HDFC has been investing a lot in their digital platforms, and that's smart. By offering seamless and personalized digital experiences, they can tap into a massive market.
Right, it's all about meeting customers where they are making banking easy and accessible. What about beyond the digital world? Are there any other areas where they could expand?
Another big opportunity is rural India. HDFC already has a presence there, but there's still a huge untapped market. By using technology and finding creative ways to reach rural communities, They can play a key role in financial inclusion. It's not just about making money, it's about empowering people
Yeah.
who have been excluded from the traditional financial system.
That's a great point. So we've covered a lot in this deep dive. We looked at the numbers, the trends, the potential problems, and those exciting opportunities. What's the final takeaway you want to leave our listener with?
With HDFC's market dominance, their strong financial performance, and this ever-changing landscape we've been discussing, the big question is, what do you think is the most likely scenario for HDFC Bank's future?
That's a great question to think about. We've provided the info, but it's up to you to interpret it. Keep learning, keep asking questions, and maybe even do your own deep dive into HDFC using those resources we shared.
Until next time, happy investing.